Okay, now we have the cost of merchandise sold down. Now we're going to move to the dreaded closings. And this is a closings for, I guess I need to make that bigger, huh? Interesting, how come I can't make that bigger? These are the closings for, let's move that over. Come over here, there you go. Well, it's still not going to fit. Let's close this. Now, we're there. You can see it all. We're doing closings. Now, I know everybody hates them, but that's okay. We can do this. You are going to close anything that's going to show up on the income statement and anything that's going to be considered a draw. And now remember, we may be dealing with a draw account, or you could deal with a dividend account on that. So let's look at this and try to figure it out. I've even given you the entries over here, hoping that's going to help you take one thing away from what you have to remember. First thing you want to do is close the revenue accounts. So where are the revenues at on this sheet? Revenues are now called sales. We're in merchandising, so revenue equals sales. What kind of balance does the sale, and this might help here. Let's just write this out. Sales balance typically is a credit. Expense accounts typically are a debit. The income summary account, if it has a gain, has a credit balance. Now, the draw account typically has, and that draw can be a dividend or a draw, as this one is, will have a debit balance. And I need to stop just now. So now, knowing that I want to make revenue accounts or sales accounts 0, and it has a credit balance when it is a sales, how would I close that? What entry? Well, I would have to debit it, right? So my revenues or sales, however you wish to look at that, will have a debit entry here. And how much would that be for? Right here is your answer, right there. That means I'm going to close it into my summary account as a credit. So that makes sense. So revenues get zeroed out with a debit. I guess that would help if I wrote that up here. And this is a credit. Okay. So that one probably makes sense. Okay, now we're going to look at expenses. And what are our expenses on here? Well, sales tax payable is not an expense, but selling is. Store supplies here is an expense. There's administrative expenses. How about this cost of goods sold? Yes, that's an expense. Interest expense. Merchandise inventory is an asset, right? So it can't be that. Notes payable is a liability. Okay. So now we have two new accounts here. And remember how I said sales discounts and sales returns subtract from your income? Well, those are added to the closing accounts here now. Because when we did the cost of goods sold here, remember? When we did this, this was our sales, and we subtracted these two. Those have to be closed out. So now we have a new list of things to be closed when we talk about expenses. We're going to do the income summary as a debit, but first we have to add up sales discounts, allowances, administratives. This is cost of merchandise sold. This is the interest, the selling, and the supplies expense. So those all have debit balances. We want those at 0, so we have to credit them. And to do that, you would first start the transaction with pulling this over. Sales discounts are 20,000, correct? Allowances are 13,000. Administrative expenses right here are 300,000. Cost of merchandise sold is 650,000. Interest expense is 10,000. Selling expense is 140,000. And supplies expense is 12,000. Now you add all of these up and come up with the debit for sales revenue. And let's just put that amount in for this one is 1,375,123. So what is my debit here? It is 1,145,000. Okay, so now think about this. Just think about it for a minute. I have a credit here in income summary. I have a debit here. And I want to make the income summary now 0. So if you literally know nothing else, you're going to subtract this 1,145,000 from this 1,375,000, and that's the difference. And that means I still have a credit balance here. So if I take this and subtract that, the difference between that, I need to debit the income summary for that amount. So let's just see if I'm right. Just looking at that without looking at anything else. Now, what is my net income? Well, if these are all my expenses, and these are my subtractions for the to get to net income, this probably is my net income, or it better be. And when I do the equity statement or the retained earnings statement, what do I do with the income, net income? I add it to my capital accounts right here. So I'm going to debit the income summary, and I'm going to credit my capital account for that amount. So literally all you do is take this credit minus this debit and debit the income summary. This debit then needs the credit to the capital account. And finally, what's the very last one? You're going to close the draw account, which is 25,000. The draw account has a debit balance, correct? So that means I need to credit it. And we always subtract draws or dividends from the capital accounts. And those are your closings. They don't change. They are just like that. They're fairly stable. So I hope this has helped. We'll move on and look at the homework here in a second.